Welcome. On today's show, we have Michel of MeanFi. We're going to discuss details about the project, funding, team, and token, along with any plans on the roadmap. MeanFi provides everyday DeFi banking workflows. Michel, let's start by giving some background about yourself and welcome to the show.
Thank you for having me here. My name is Michel. I'm the CEO and co-founder of MeanFi and Mean DAO, and I've been in the crypto space for a long time, 2011 to be precise. So I'm like one of the true OGs of this space. You can call me that. I'm a software engineer. I'm a computer science major by trade, and been always a builder. So been building software for longer than I can remember. And my first foray into Bitcoin was also building software. 2011, we launched a company called Paymesh, and that was essentially a gift card service that was settled on the Bitcoin blockchain. Issue one's gift card service that was settled on Bitcoin. Back then, it was mostly for hippies and people wanting to create their own countries inside of the United States and things like that. But ultimately, it was actually used. The ones that picked it up was the porn industry, because it was anonymous, basically being able to transact in between consumer and a recipient. We sold that in 2013 to a German telco and to a Japanese telco with a German subsidiary, and they continued to run it from there. My last venture was also in crypto related to real estate. So it was simply settling transactions for real estate investors deploying capital in the US on crypto, right? So we would handle their escrow services, AML, KYC, all of those things if they wanted to come and deploy some of that capital in commercial or residential real estate here in the States. Now I'm doing MeanFi, and this is my first DeFi project. We started to look into putting some operations in the company that I was running at the time that had to do with self-custody and had to do with payroll. And we didn't have a solution that we were happy with, so we decided to build it. And here we are now with MeanFi.
So you didn't see a solution for payroll?
Yeah, so the genesis of MeanFi and everything that we're doing on Mean DAO was really that I wanted to start giving my employees the option to get paid, whether it was partially or in total, like a portion of their salaries, right? So that I wanted to be able to, Joey, my employee, is, hey, I want to take like half of my salary in Bitcoin, and Jane wanted to take I want to take 20% of my salary in ETH, and somebody like that kind of workflows. I wanted them to have that as one of the benefits, but that had a lot of challenges for us to actually do. We started by first trying to find a solution. I thought, of course, this is going to be out there. And the reality, and this, I'm talking like Q4 2020, right? So a little over a year ago now. And we started to go out and try to find solutions for this. And most of the solution, to my unpleasant surprise, were custodial, meaning there was an actual company behind it that you need to send your money or your crypto, and they will do the distribution. So you had to trust. There was this relationship of trust from the beginning. That is the exact antithesis of everything DeFi. So I was like, no, we really want to keep our funds. I want this to be a self-custody solution that I keep my funds and I am able to manage it. And you're just a software provider for that. The closest things that we got to find a solution for us at the time was a protocol called Sablier on Ethereum. Superfluid was not a thing back then. None of these things existed, a year and some change ago. Only Sablier. And Sablier, when we got to it at the time, was oh, this looks promising. Let's see if we can make it work. But a number of things kind of broke down very quickly. I think that Sablier is a phenomenal product, but it's thought of as a consumer product. They didn't think about the different use cases from the business perspective. And maybe they didn't have all the background as previous business owners and how business runs operations and things like that. But very simple things. You had to define, at least at the time, start date and an end date of your contract. I don't know when I'm going to fire my employees. That's not going to work, or you're going to give me a lot of work. Now I have to define that every month or every year. And then it kind of breaks down again, some of the basic concepts that we would want to try to accomplish were not very doable with the way that things were at the time. And then there was the issue of the fees. If, I have Joey, my employee, and he's receiving $1,000 a month, and I have to tell them that for him to actually take that $1,000 out, he has to pay 80. He's going to be like, dude, come on. So So that also kind of broke the pie a little bit. So we kind of started, being builders. We were like, okay, let's see if this is something that we can put together ourselves and use it for ourselves.
I guess one of the biggest problems, or at least objections that I see, even for paying some people in crypto right now, is that the whole tax tracking hurdle, right? Like as soon as you start paying crypto or set up a company wallet, then you have a whole nother tax tracking aspect that may not also communicate with your centralized type of accounting software like QuickBooks. So,
Yep.
How are you guys solving for that and kind of handling that?
So two things. So the first one is that we don't do any tax tracking software. That's the first part. So it's not part of our offering. But thankfully, there are other companies that do that very well today in the space. From ACCOINTING is one of the biggest ones. There's also Koinly is another one that works really well. So I think that it's important kind of like make the distinction between the software that allows you to run your payroll and the software that allows you to pay your taxes, right? And they are usually very, very different. For example, like a bank allows you to do transactions, but a bank doesn't give you tax reporting. Like you have to still download those transactions into QuickBooks and into your other tax reporting tool. And there is where you do your tax reporting. We are a lot closer to the bank side than we are to the QuickBooks side, right? So we allow you to do transactions to enable operations, but the reporting part, yeah, you have to download those transactions or sync up with the blockchain and then get those transactions over to your accounting and bookkeeping side.
What happens in the background when you're paying each employee every month, let's call it this $1,000 salary that doesn't cost either party these extraordinary like high gas fees?
Yeah. The first kind of like important note is that when we decided, okay, we're going to build this, we started to evaluate not only Ethereum, but multiple chains that we were going to be using. And Solana came out as a clear winner for us. And that's what we are built. We're built on the Solana network. And Solana has a number of benefits that gel very well with our kind of product. The first one is that the quality of the wallets and the wallet service, the way that people and individuals and users access the DeFi applications in Solana is extremely high. Like I don't ask me like why the user experience in Solana is like a tenfold better than MetaMask, because I'm a user of MetaMask for years, right? So, but if you go and you use Solflare or Phantom or like almost any wallet that is in Solana, the user experience is smooth. It's like Apple versus like the crappiest Android phone that you can find. Okay. It's night and day. And for us wanting to be a consumer product and a consumer application, that was a big, important step. We cannot have people, if we really want to onboard them, like be configuring like, what is your RPC address and stuff like, come on, like seriously, like no bank would ever ask you like enter the IP from where you want to connect to the bank. Like that doesn't work like that. People won't be using banks. So for us, the user experience was a big, big part of that. And in Solana, the builders and the people that are building in Solana, for whatever, again, like don't ask me why, but it is abundantly clear that the care that is taken into the quality and the user experience of the products that come out of there is a lot higher than what we see on almost any other platform. So we're building Solana, and so user experience is better. Fees are almost zero. So every transaction that you do in Solana costs right now, the moment they're recording January 2022, 5,000 Lamports. That's less than 0.00001 penny, like dollars, right? So like that's like fractions of a penny to do a transaction, which means that anybody wanting to withdraw that $1,000 that I mentioned before, like, okay, you have to pay a transaction fee of like less than a penny. Sure. Like, okay, no, not a problem, right? So that wouldn't be a problem for most people or for pretty much any DeFi application in general. The third thing is that Solana is the restrictions on the network to program on it are actually quite high. Like you have to really think through and structure your programs in such a way that you cannot have this Aave size type of programs that like go on and on and on forever. Aave is phenomenal, but like it's a monster in and of itself. And like you have to think very well structured about how much computation you do in every instruction that you're going to be running on chain. You have to think about a lot of different things that allow the network to be very performant and very fast. even under very stressed conditions, the TPS per second on Ethereum are 3 transactions per second, give or take. Nowadays, Solana is 1200 in like the worst network conditions ever. When network condition is like through the roof, you have like 10,000, 20,000, 30,000 transactions per second. And in Ethereum, you get 3. That's why we ended up picking Solana and building on Solana. Also, it helped that our background was in C-based languages. In Solana, you have to write programs in Solana in Rust, which is kind of like an evolutionary step for all C-based languages, kind of like the latest iteration, which is a phenomenal language.
So you kind of hinted on like some of the experience of your background. So let's roll into some of the other people that are on the team and kind of what experience they're bringing to the table.
The founding team, there's 5 of us. And the way that things kind of worked out was like towards the end of last year, I was leading the real estate crypto company that I mentioned. That company, I basically quit to kind of like start thinking about like, what do I want to do about this? The reins of that company were handed over to the COO, and after 5 months in the mind incubator, 4 months really was what it took. But right around like March, April time of 2021, like I had a plan of what I wanted to do. And Adele, which is my CTO here, he's been my right hand man for longer than I can remember. We went to high school together. We went to computer science school together. We have run every single business together that we've done. So like we are kind of like yin and yang here. He's the shoulders upon which my head stands on. And then the other team members were gracefully and thankfully for us, for the company, people that we had worked with before. So those were people that were also part of the previous company that upon seeing, hey, I see what you guys are doing or want to do now, we want in. And then essentially, we started off a company with 5 people that knew each other very well, that had worked with one another for years, that had previous experience in our own communication and our own like little knickknacks and our style of coding and our style of like working together, which allowed us to execute very, very quickly the things that we wanted to execute. And by the time that we started on the execution path and the planning path, we quickly realized that this is not just about doing payroll. It's something a lot bigger than that. And the ability to do on-chain automation and being able to have and build a real-time settlement layer for money is really what we're after here, right? And as it is put in our mission, we want to be the financial equalizer. We want to be able to be the bridge that brings people from traditional finance into crypto and to onboard like everybody that is unbanked, educate everybody on how to leverage those things and the tools that we have in crypto. And we're doing that in big part because of the technologies that we built with money streams. And that powers a lot of the on-chain automation that is not possible anywhere, like in any chain. And that's what we called everyday banking workflows.
So maybe give us some insights into beyond paying employees or team members, what are really all the use cases that you see that you guys are going to implement now and also in the next 5 years so people have a better understanding of where this actually goes?
Yeah, phenomenal question. So I wish I could list all the use cases, but I can because it is unlimited, is basically what it is. So I'm going to limit myself to list a few that people will be able to connect with rather, right? And I'm going to start with like the super basic, something that some people might not realize, but everyday banking workflows are not possible on DeFi today, except in MeanFi. So let me expand on that. If I wanted to transfer money to you, $100 on traditional finance, say you have Chase or Bank of America or doesn't matter whatever bank you have, Wells Fargo, and I had any other bank, there's Zelle, there's ACH, there's like a number of things. There's like all sorts of payments that you can do. There's Venmo and like, I don't even know how many applications exist today in the traditional finance world, centralized finance world, that I can send you money right away, immediately, and you'll be able to verify it immediately. Apple Pay, like the list goes on and on and on, right? And in DeFi, and let's try to kind of frame DeFi as permissionless, number one. Okay, you don't have to ask anybody for permission to use DeFi, all right, or any application. Whereas you, for example, would need to ask PayPal for permission to create an account and fund it, right? So that's one contrast there. Permissioned versus permissionless, right? Another one would be custodial versus non-custodial, right? So custodial is like if you want to send funds on the traditional way, you have to have your funds being custodied by somebody. Let that be your bank, PayPal itself, or Apple Card or Pay or whatever the system that you're using. They are the ones holding onto your money, and they are the ones sending them from their venue to whatever destination you ask them to send it, right? But you don't have the funds with you. In the case of DeFi, you are self-custody. You have the fund with you. There's nobody else holding onto your funds. Your funds are your private keys, right? Basically, okay? So you have access to those private keys. You have access to your wallet. You have access to your funds. So those are two big contrasts. And the last piece is permissionless. And that is that you can make transactions in a way that you don't have to. So the first one is trust. You need to trust PayPal. The second one is you need to give PayPal your money versus having it yourself. So you need to trust PayPal versus not trusting anybody. You're talking to a program, okay? No company, no entity, no person. You're talking to code in this case. Custodial versus self-custody. You need to move your funds and give your funds to somebody else versus you keeping your funds to yourself here. And then the last one is permissionless. You need to ask for permission to PayPal in order to do a transaction. Try to move $1 million on PayPal. Good luck. You can't. Okay? You don't have to ask for anybody for permissions on DeFi. You can move $1 million in 2 seconds, and that's it. They're moved. Okay? So those are the big contrasting areas between DeFi and traditional finance. Now, if you wanted to move $100 immediately in traditional finance, if you're okay with those rules that they're set up, it's very easy. And it is very easy also to move any amount of dollars, $100. From wallet to wallet, almost every wallet has an immediate transaction. I mean, I guess in Ethereum, it might take about 10 to 12 seconds if you're willing to pay $80. On Solana, it takes a second or two if you are willing to pay fractions of a penny. And we can do this for every chain, different chains, different speed and different throughput. But at the end of the day, in like relatively short, almost instant way, you can move money from anybody to anybody. Bitcoin sends you $100 worth of Bitcoin, not a problem. Let's now move into the next example here. I want to schedule money. I want to send you $100, but I don't want to send you $100 like right now. I want to send you $100 next Friday. Traditional finance, like everybody, like PayPal, again, like Venmo, the bank account, Zelle, it doesn't matter. All of them have scheduled transfers. You simply like go to send and say, well, I don't want to send you right now. I want to send it next Friday. Boom. And you say schedule, bing, bam, boom. Everybody's pretty used to that workflow. Now, if you try to do that in DeFi, you will be hard pressed to find one application that lets you do that.
Yeah, there's not very many applications that are using dated type options or anything at the moment.
Scheduling is a big problem. Anything that has to do with scheduling is a big problem in DeFi. Anything that has to do with DeFi automation that requires to pull a trigger at a future time in any decentralized, permissionless, trustless, censorship-resistant, distributed network is a really hard problem to do, because the way that the central guys do it is because they have servers that they control and they have a cron job on those servers and they're paying for those servers, which are central. And then those cron jobs like basically wake up next Friday to execute the transaction. But in DeFi, there are no central servers. So the infrastructure is very different. So you have to think about those problems in a very different way, right? So here we are, 2022, selling the world that DeFi is the future of finance, but we cannot do a simple scheduled transfer for next week to you. That's a big problem if you ask me. Right? So there you go, one use case that you can power up with money streams. Okay? So I'm going to make like a little pause to define what a money stream is, which is our core tech. Money streams it's a smart contract that lives on chain that essentially allows for a real-time settlement layer between any sender and recipient of money. So if I wanted to send money to you, instead of sending money once, I can send money over a period of time in such a way that on every second, you get a little bit of that money. I'm going to send you $30 at a rate of $1 per day. If one day passes, this contract that exists between you and I enforces the fact that if I wanted to say, no, I don't want this relationship anymore, I can only withdraw from that contract $29. The other dollar is yours because one day already passed. All right. So we can do a lot of playful things with that, such as, for example, scheduling things in the future, not paying you anything for X number of days or time. And then on next Friday, you are entitled to 100% of what was locked in that program. Right? So like a lot of different rules like that kind of like start coming into play. Another very simple workflow, for example, is dollar cost average. Okay. That's another everyday workflow that most people use. If you open up Coinbase, Binance app, FTX, it doesn't matter which app you open, and you are trying to get yourself more familiar with crypto, 9 out of 10 people say, you know what, this is simple. I'm going to buy $50 worth of Bitcoin every week, and let's see how it goes. It is one of the most sticky feature of any banking application in the traditional and centralized world. Okay. However, try to think long and hard. How many applications do you know that allow you to do dollar cost average on chain in a decentralized way?
Yeah, I haven't seen it quite yet, I don't think.
There are a couple here and there, okay? But there are like really obscure, highly technical, not friendly at all. It's just not user friendly. It's made for a different purpose. So we built it too. That's another one of the use cases, right? So like now you can go and connect your wallet and simply say, I want to buy $50 worth of Bitcoin every week. It is completely trustless, completely permissionless, you can do that with a penny. You can do that with $1 billion if you want. We don't care. We don't see your money. We don't touch your money. We don't do anything with your money. It is your money. It is your wallet. You are interacting directly with a smart contract that's deployed on chain, and that's it. 100% of what is happening is in your control. And those two things are what kind of powers the rest of the universe. If you think about it, the rest of the banking world. If you wanted to send a remittance to your loved ones abroad, right? That is nothing more than a recurring payment that happens every month. And what better way to do it that instead of having to take your trip into Western Union or MoneyGram, just go online, open up. Okay, you don't want to send stable, send USDC. Send USDT, send DAI, send whatever you want. Like on pretty much every single token, we allow all of these services. So you can send BRZ to Brazil. If you're trying to send to Brazilian real, use the BRZ, send it to Brazil. You want to send USDT, use USDT. Anything that is available in Solana, which is like 4,000 different tokens. Go ahead, knock yourself out.
How do you guys kind of integrate the TradeFi, though, banking into the DeFi? Meaning, for all these use cases, obviously, there's always some type of fiat on-ramp or their paycheck or the payroll company and some sort needs to integrate and bring that over. How does that connection work, and how do you guys integrate that?
Yeah, good question. So we have a lot of work to do in that area in particular. Right now, we do have integration partners that, like directly on the site, you can essentially go and connect to any of those integration partners that we have to deposit money. So we have FTX, we have direct deposits with Transact. So you can actually like take a credit card or a debit card and use it to deposit your fiat. And essentially what you're doing is you are buying USDC or USDT with that fiat, or you're buying Sol, which is the native currency for Solana. You can bridge your assets from different chains. So if you have already assets in Ethereum, you can bring those assets directly from Ethereum, from Polygon. So those mostly are the 3 different ways. You either deposit from your FTX account, you buy directly with your debit or credit card. There are some limits that the partners put on that. You cannot buy $1 million with that, right? I think that there's a 500 daily limit or something like that. They're always changing that, the partners that we work with, and users will have to go through a minimal KYC to make that move from fiat to crypto. But after you are in crypto, like fully permissionless, fully decentralized, fully trustless, fully self-custody. So everything that we do is 100% on your side. We don't offer any service per se.
So I think most of the companies, or legacy companies or large companies across the globe, are going to continue to use some type of fiat for the foreseeable future, right? So, taking what you said, how do you see it onboarding customers just with even less friction, to the extent without this KYC, but almost they're able to just scan that paycheck, or that's automatically they can set up with their payroll company, and a portion is going right into their DeFi wallet?
And that's exactly what we enable. I'm glad that you got there automatically. So the idea is that if you want to be in crypto, just be in crypto natively. Like, remove the need of that conversion of anything. If you as an employee want to receive, and you know that the ultimate goal is to take 10% of your salary and convert it to Bitcoin, why don't just take the 10% of your salary in Bitcoin to begin with? And that's it. Like, that's, you start off right. You don't have to worry about converting it. You don't have to worry about the transaction. You don't have to worry about it. Like, your employer sends you the Bitcoin directly, and then you move it already in DeFi. Now, in order to do that, you can open up a treasury as a business with us. And from that treasury, you can set up your payroll treasury for any employees and all employees if you want. And you can define the rules by which each employee is going to get which token at which rate and how often. Okay. Now, the how often part is also kind of like an interesting one, because now that we have the capacity to, in real time, down to the second, distribute funds, as an employer, you have for the first time the ability to have truly capital efficiency on your payroll solution. And as an employee, for the first time, you will be paid actually for the hours that you work. Let me give you the actual example. Normally, companies pay employees on a schedule of like twice a month, like every 2 weeks, you get one paycheck. However, it's not like on the first of the month you were not working. Like, you did work on the first of the month, and on the second, and on the third, and on the fourth. You were just not getting paid until the 15th. And then the company pays you for all those days from the 1st to the 14th that you work. Which means that you are effectively making a zero interest loan to your employer for 14 days. Now, I don't know you, but I don't know a whole lot of places where you can go and get zero interest loan for any number of days. Like, that is called leverage, where I come from. And they have that leverage as an employer, and you don't. This is in detriment of you, the employee, okay? With money streams, you work 1 second, you earn 1 second. There is no payroll day. Payday is every second. You simply open up the contract between the employer and the employee and say, you're going to earn 1,200 USDC per month. And your start day is, when is it? Tomorrow. We can figure the start day. And tomorrow, starting tomorrow, if you open up your contract, you'll be able to withdraw from it without asking your employer, without calling HR, without like, where's my paycheck, without none of that stuff. And your employer will be able to see that you are getting paid that much, and he shouldn't care how often you withdraw from it because you work for it. The minute that you misbehave, that you're a bad employee, that you stop coming to work, guess what the treasurer of that, the payroll owner or manager, is going to do?
Hit the kill button.
Yeah. Stop the money stream. This guy cannot receive any more money from us. But everything that was already streamed is yours, whether you used it or not. The employer doesn't have any right to take away from you. From the employer perspective, this is also a phenomenal tool. No more payroll software, no more pro rata calculations, no more 56th week of the year calculation. Like, none of that crazy stuff. You simply open the contract, make sure that you have enough money in your treasury to keep paying your employees. Like, this use case of like a company being late for payroll for 3 months and people not getting paid and like conflict create, like, it's gone forever. That cannot happen here.
That's interesting. That's definitely a big use case. And obviously the company needs to be able to fill that treasury in order to pay out, right?
Yep.
But otherwise they get paid daily. So let's roll into kind of how you guys are formed. either a company, a project, a DAO, and maybe how you also started, if that's the same way.
I've been a member of multiple DAOs, and I've been heavily involved in different DAOs. And I think that DAOs are the future of work. They are the future of the way that companies are created. And from the very beginning, we knew we wanted to run as a DAO. And we are. The name of the DAO is Mean DAO. We are a product DAO, and that just kind of like a clear distinction, because there are different kinds of DAO, I guess. You can have a service DAO if you offer some sort of service, or an investment DAO if you want to work kind of like as a syndicate of venture capital, or a product DAO or protocol DAO, which is what we are. And we build products exclusively. Like, we don't invest in any company. We don't offer services. We just build software. That's basically what we do. The DAO structure is right now set as 70% token holding, 30% reputation system. So your vote is weighted in that way. That means that for you to be able to vote, you have to have certain levels. And if you are at those levels, you can basically use your reputation system to account for 30% of the total mean power, which is the total voting power that you have. And 70% depends on what you're holding on in terms of actual tokens. We have a governance token called Mean, and that is the Mean token. We recently launched the token and the IDO.
What makes a normal type crypto project, or at least starting off what's called a more centralized type project, different than launching a DAO earlier on?
I see. So there are two main differences. One is on the infrastructure that you're building. Most of the time, companies that have some central management or some central nature to it, that they're not like pure DeFi projects that are somehow like halfway through. Every time that you go to any website that says that they are DeFi and you have to enter a username and password, that is not DeFi. Like the end, I don't care what they say. They might be interacting with a DeFi contract, but they themselves, because you need to identify yourselves with the application and with the thing, like, you're breaking the trust barrier right there, right? Like, DeFi is by its nature you interacting with code, and therefore not having to trust any person or any company. I don't care who's behind Uniswap. I don't need to, I'm going to run due diligence on this company. I only have to run due diligence on the code that I'm interacting with. And if I understand the code, and if the code has been vetted, and if it is open source, and if it is audited, and if it has security reviews, and it has been checked by thousands and thousands and thousands of members of the community and validated, even if I don't trust any of them, and I'm like, I'm suspicious, there's something going on here, I can still go to GitHub, open the code, read it myself, know what I'm going to be running with, or what I'm going to be interacting with, and then run it. I don't have to trust anybody other than code. So the first big distinction is that, right? So, like, you are most likely not in DeFi if you don't have that kind of relationship. If your code is behind a private wall, or if your code cannot be easily checked, or if you're running centralized services out of like Amazon or Google or this or that or the other, like that, like, at that point you can be shut down. I guess, like, you can have DeFi services with supporting mechanisms on centralized infrastructure to make it more speedy and faster and stuff like that. But if you're actually holding user state or data of any kind about your transactions, like directly, like, you're just breaking the trust barrier right there. That's one. That's from the infrastructure perspective. From the team perspective and the decision-making perspective, there's a huge difference. Central companies are usually managed by a board. So regular companies, you have a CEO, you have a C-level suite of executives that have some leverage in the decision-making of operating elements of the company, but most of the large decisions are made by the board of that company. And that board is usually controlled by private investors, VCs, and things of that nature. So the decision-making of the direction and the things that are considered right or wrong in the company are made by a very small group of individuals, but end up affecting millions of people depending on how large the company is. Take Apple, for example. It's a phenomenal company, and people trust in them because they have good leadership. But those leaders are making decisions on behalf of millions of users. Those users have zero say in what the next iPhone looks like, or what they want in the next iPhone. Zero. There is no input I'm sure that there is like user studies and groups and blah, 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 blah. But there is no ownership of Apple from owning an iPhone. I own nothing of Apple, yet I am clearly invested in it, right? So in DAO terms, you own part of Apple, and therefore you own part of the decisions that Apple will be making if Apple was a DAO. In other words, it wouldn't be only like Tim Cook and his C-level suite of executives making those decisions and basically pushing down an agenda onto the rest of the company and therefore onto the rest of the world. It would rather be a more meritocracy type of environment where proposals come from the bottom up rather than from the top down, and they either get executed because they get voted in or not by the people in operating roles, right? So very different kind of way of running with like a roadmap, decisions, voting, infrastructure, like everything is very, very different. And it also guarantees longevity in longer, better ways, I think, that centralized companies, because the work is spread and it doesn't require long-term commitments from anybody. If you want to be part of a DAO today but not tomorrow, like just sell the tokens, move on, and that's it. You will not vote anymore. But if you think that you have a very high skill on your tool belt and you want to offer that to the DAO, and the DAO is in need of that particular skill for a particular project, you can go ahead and offer your services, see if you like it, and you will get paid for that. And with those payments, you will be able to either vote and do more things with that DAO, or sell it, do something else, and make some money. Same way as you would be like a freelance mercenary going through from DAO to DAO to DAO to DAO, doing different things. And that's the future of work.
So was it the sale of the Mean DAO token that allowed you guys to raise capital for the treasury to maintain operations, or how does that maintain?
Yeah, so we had 2 different rounds, and most projects have like some allocation of the tokenomics set for private round, and then some allocation that is set for like core teams and founders and advisors and things like that, and then some other parts of the token allocation that is for rewards distribution, this and that and the other. In our case, that was the case. We had an initial round for private investors, and we had in there SoftBank, 3 Arrows Capital, Defiance Capital, SVC, Sky Vision, Solar Eco Fund, like most of the bigger players on the space were here, and that allows us to raise initial capital that is 100% for operating process and like basically grow the team, keep the water flowing. And then we open up the IDO, and the IDO was for basically token distribution and allow for larger participation in distribution of the token. Right now we have 10,654 token holders across the space. So that could technically be like the size of the DAO, although there are some people that you can still vote if you don't have a token and you have a very high reputation system. It's just that your weight is a lot smaller because it's only 30%. So you need this token if you want to have higher voting power.
Got it. Is there any other benefits beyond the voting currently with the DAO token?
Yeah, currently you can make additional capital or returns on the token by providing liquidity. We have liquidity pools open in multiple AMMs, automatic market makers on Solana, especially Orca and Radium. And you can make some sexy return doing liquidity mining on those as well. You can make upwards of 200 and something percent APY on those. So that's, that's at this moment. We have a lot of other things coming up on the token.
Yeah, that's going to be the next question. What are some maybe future use cases of the token, and kind of how do you see it? I think over the last year, what we've seen is obviously a lot of tokens launched as a DAO token, and over time, maybe
they become utility,
or they're not participating in voting, and therefore we're kind of trying to pivot to figure out the exact utility.
Yeah. So most of the time, what governance token starts with is that they start as a governance token, and then they move on to being utility token and governance token both, right? So like they expand the breadth of the utilitarian value of the token itself. In our case, I think it's going to play a very similar role. Right now, you have utility in that you can make money by providing liquidity in the market, but it's very, very limited utility in general for the token. So you make, it's the same as if you were to deposit liquidity in Uniswap, you deposit liquidity in our case in Orca, or deposit liquidity in Radium. Come next, we're going to be towards the end of January this year, beginning of February, we're going to be launching protocol on liquidity. So what that means is that it's DeFi 2.0 protocol on liquidity style of ownership, where the treasury itself is going to be grown by paying yield to people that bond their LP tokens directly with us, which is going to be also extremely sexy for people to do that. At the same time, we're going to be launching staking and locking for the token. And what that means is that if you have the token, instead of having to come up with a second part of the pool to be able to put it in a liquidity pool, do liquidity mining, bond it, any of those things, you need a second half, right? So you need USDC or UST or whatever it is that you're doing on the second half. But we're going to have single-sided staking here with the token, where you take your token and you essentially put it in a vault, and you will earn yield while the token is parked in that vault. So those are two things that we're really excited. They're coming very soon. In addition to that, people that actually do staking get to share revenues from the protocol. So every single dollar that comes into us, it gets redistributed across all of the token owners. I shouldn't say all the token owners, all the token owners that have staked the token, right? That's how it gets distributed. But yeah, we have all the rules as they stand right now on the official doc site, yeah, it's exciting times.
Can you break down a little bit? What are those fees that are, I guess, abstracted from the protocol that go to the treasury?
Yeah. So the way that we make money is just like every protocol, right? Like every single liquidity pool charges 0.3% or 0.25% for every time that you do a swap or every time that you do an operation. We charge fees as well. So anything that has to do with money streams has a scheduled number of fees that we collect every time that they happen. They are negligible and very small, generally speaking, but because we are a volume business, we have a lot of money streams that are happening at all times. So there's a little bit of those monies, that revenue that we collect when anybody creates a money stream, or anybody collects from a money stream, or anybody closes a money stream, or anybody does anything with a money stream. We receive revenue. We receive revenue every time that someone does a dollar cost average scheduler, and every time that there is a swap executed on those things, there's a little bit of fee that gets collected. Again, like very, very negligible thing. But when you add millions of those, like we had over 2 billion transactions, well, almost 2 billion transactions in a little over 70 days since we started. Like, I mean, that's a lot of volume that moves through. When you take smaller chunks of those things, they end up adding up quite a bit. And that's what ultimately makes it into the Mean DAO treasury. And from there, there's a number of things that need to be funded, a number of working groups. We need to do marketing, we need to do operations, we need to do just like a normal company department would work, except that this time it is managed in a fully decentralized way. And those funds need to get allocated to the budgets that have been approved by the DAO. And one of those is the finance that needs to basically allocate funds to the stakers and to the bonds that we are doing as part of the program. And that's how they get paid out.
So who are your current customers that are, doing those 2 billion transactions? And then second part is, who do you see are your next users to come on board in the next 12 to 24 months?
Let me rephrase. It's not a billion transactions, it's $1 billion worth of transactions.
$1 billion.
Okay.
But $1 billion, who are the current users of the platform? And then who do you see are your next set that are going to onboard next year or two?
Yeah, phenomenal question. So our roadmap, coincidentally, is divided in 5 different phases, and all of them target the different customers and different focus areas that we have. We are just wrapping up the first phase. Second phase already started, by the way. Like they are started sequentially and they end sequentially, but they have some overlap with one another. It's not like we have to wait until one is finished to start the other, right? So right now we have phase 1 and phase 2 running in tandem. And phase 1 is all about consumer. That is consumer banking user. That is basically the everyday retail banking user. Our first goal was to be able to provide to them the same capacities that they have on their normal bank, right? So you should be able to make a transfer, you should be able to make remittances, you should be able to do DCA, you should be able to do kind of like the normal things that are part of that. The second phase is focused on the retail investor. Okay, so first phase is retail consumer, retail banking consumer. Second phase is retail investor. For retail investors, we're looking at people like you and I, that we are not a big investment bank, or we are not a family office, or we're like, you are playing with your money, but you know that what you're doing. You're an investor and you want to be able to deploy capital easy and in ways that you feel confident that you're understanding what's happening in the process. For that, we're doing, for example, the staking is part of that process. The bonding is part of that process. We open already the exchange. You can go to MeanFi.com and exchange thousands of tokens to thousands of other tokens. The DCA is in part of that. Like, you are essentially making an investment in a particular asset on a recurring basis. So all of those are workflows that have to do with the retail mindset of an investor. Those are retail investor workflows. And those have been already powered. We still have some work to do to kind of like wrap the phase 2 with retail investors. And then phase 3 is fully focused on businesses and business workflows. We already have a couple of those in place. We open up treasuries, for example. They are available today in production. And that means that any business can go and open up their own treasury and they can create their payroll. But we have a lot more features that we need to enable and power through and make available to businesses and to DAOs. So big part of DAOs is securities, because you're working in a decentralized way. So being able to offer multi-signature wallets, multi-signature vaults that you can basically spread the risk and require 305 multi-sig or 507 or however many, X of Y multi-sig. We already have that. It's just not public yet. It is private, and we have some beta users that are helping us, test all of those things, but those are still being worked on and working out some kinks. We have a multi-sender also available for businesses. So a lot of different solutions: payroll, multi-sigs, multi-senders, treasury management. All of those things have to do with business workflows. I, as a business, want to be able to be part of DeFi, make my people and my departments be part of DeFi, distribute assets as part of DeFi. Like, they will come to us to focus on that. Stage number 4, and this is a little bit further down the line, towards the end of 2022, is that we're going to probably be able to start stage 4, and that's institutions. That's institutional investors, bigger whales, people that have to deploy capital that can potentially create big moves in the market. So, mind you, if you have a liquidity, because it's all decentralized and there's an order book that you have to fill, every swing that a big whale or big institution makes can completely destabilize the market, depending on the stability and the depth of what they're trying to trade. So if you have a liquidity pool, for example, in DeFi that has $1 million, you might think, oh, well, that's a lot of liquidity, until someone with $1 million comes to make a trade, So it is a lot of liquidity for retail trades, because everybody's trading like, 100, 1,000, 5,000, 10,000, and that's good for $1 million deep liquidity pool. But when someone makes and starts making swings with, $1, $2, $5, $10 million, the liquidity pool goes to like hell. Like, the entire market gets destabilized. And that needs different kind of provisions, different kind of way of thinking about how do we actually move that capital through the market. And those are different set of products altogether, right? That's what that phase is for. And then the last phase, after we have all of those things well balanced and well understood in Solana, is about a multi-chain future. I want to clarify: multi-chain, not cross-chain. Okay, multi-chain, different thing than cross-chain. But yeah,
that's some plans in the roadmap, maybe in the future.
Yeah, 100%.
Do you see that the reason to do that is that there's ultimately just users that are going to be on other chains that don't want to use Solana, and that's why you want to capture that market?
Yeah, exactly. I think that the primary reason for multi-chain is manifold. Number one, scalability. There is no one chain that will be able to take 100% of the traffic of the world, period. The end.
Thank you.
It doesn't happen. Like, it's impossible. Solana will not be able to solve all the problems of the world. If everybody that needed to do a banking transaction decided to go to Solana, Solana will die tomorrow. The same way that if everybody decided to go to Ethereum, Ethereum will die tomorrow. Like, it's just impossible. So we have to spread the load across multiple chains to be able to assimilate the throughput necessary to run the international financial infrastructure that we're aiming at with DeFi. So that's number one, which means that, yes, there's going to be some chains with more users than other chains. And we think Solana has a very good, it's already a top 5 crypto. Like we're definitely already in like top usage and statistics and all that. We're in the right spot right now. But for example, by the time that we get to institutions, it will probably not be the right spot. Institutions don't move $1 billion in Solana because it's fast. They don't care if it's fast. They care that it's secure,
Yep.
safe, that it's slow, that you can like all the opposite of this, right? So I'm not saying that Solana is not safe. Solana is very safe, but the mindset, like it stops being a concern for an institution that, oh, you can execute it in a second. Like nobody cares for that. Like, I want to see my transactions getting the confirmations slow and for sure they're on the Bitcoin network or in the ETH network. Like that's fine. That's totally fine. So it's very likely that if we want to attract institutions, by the time that we get to stage 4, that we will have to start attracting institutions that already are doing workflows directly on Bitcoin or on Ethereum, because those are the two biggest ones right now, right? And institutional money is going to land there first because it is the safe place to put it. It is the most proven.
With many competitors and most projects being open source, I mean, how do you guys maintain a certain moat or gain enough market share to continue in business, basically?
Yeah, it is a struggle for sure, because there is the conundrum here that all projects have to face is the same one that Uniswap had to face when they start to get cloned left and right, right? So for historical context, and I know like historical, I guess this happened 2 years ago, but it feels like forever. But Uniswap was kind of like the first real usable implementation of an AMM that came into the market. And they had a good UI, super simple, from to and like go. Like that's it. I mean, the thing could not be any simpler. And that was a big, like ginormous step, I would say, for DeFi to realize, oh, like now we can actually have liquid tokens in a permissionless way. This changes everything. And you could have think, well, all other AMMs that kind of were born after that could have just said, I know that, I mean, the AMM formula is like pretty simple. I know the formula. Let me go and open up new file and start coding. But it was a lot easier to go to the Uniswap repo, fork it, and that's it. Tomorrow, I have a UI. I change the name. I change the repo. Now I have it in my repo instead of the Uniswap repo. And I have exactly the same functionality as Uniswap has without any of the legwork. That was the case, for example, for QuickSwap. That was the case for SushiSwap. That was the case for PancakeSwap. That was the case for almost all of the Ethereum and Binance Smart Chain contracts or AMMs. They were clones of Uniswap V1. And then Uniswap V2 came about, and they said, well, yeah, we're going to continue to be open source, but now you have to ask us for permission. And people were like, okay, we're not going to ask you for permission. We're just going to, anyways, copy it, do a little bit of work, just change the variable names and make sure that the name doesn't say powered by Uniswap, because we were late. Quite literally, most of this project started with, if you look at their code, the only thing they changed was the logo. That's how SushiSwap started, quite literally. So now, okay, projects are forced to change more than the logo. Maybe they need to look up the code a little bit and do a little bit other changes. And I think that what has been happening little by little is that the longer you are in the market, there is a first mover advantage here that is really hard to change. And it doesn't matter who clones Uniswap code by now. Uniswap is not going anywhere, because the trust that has been deposited in Uniswap, it's so large that the amount of TVL that you have logged, the amount of users that you have going through it, the amount of trust that all of the projects are putting on your particular pools, it's so large that the network effects are impossible to roll back or move completely to some other place. Unless there is some fundamental improvement or fundamental innovation that clearly you can get elsewhere that you cannot get on Uniswap, but they have continued to innovate. So I think that the continuous innovation is the key here. Now they have concentrated liquidity, and tomorrow they will have something else. And those who decided to clone the V1 and then the V2 and then the V3, they will be always chasing the latest innovation that the original project did. And therefore, they will always have to prove themselves. I don't think they're going to be able to keep up on that long term. So I think that this is a long-term play. In the short term, it is true. Anybody can copy our code. It has happened already, by the way. But we have a very large community. We have a very large user base, over 100,000 users right now. And I think that the network effects that we have been able to accumulate already in Solana are far beyond what any of those other cloners have been doing. So I think that we're going to be okay.
Well, I appreciate that. And let's leave it off there.
Yeah.
That was a great episode. Michel, what is the best way for our listeners or anybody to reach you or learn more about the project and get involved?
We have 2 official channels. The first one is Twitter, believe it or not. That is our official channel of communications. Twitter is more of like, if you want to read the newspaper about what's happening with MeanFi, and that is at MeanFinance. The second place that you can head over to is Discord, discord.meanfi.com, or just simply go to the website, the official website. All the links are there, meanfi.com, meanfi.com.
I appreciate coming on. Thank you.
All right. My pleasure.
If you want to get notified of our upcoming exclusive interviews, subscribe and tap the bell icon below. Then drop your comments. And lastly, subscribe to our private newsletter at bullflaggroup.com.